following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good to be back with you. A lot of earnings out, continuing to come out. Here's Wells Fargo. Looking at this pre-market here at 47.87. Looks like we're printing already this morning. Again, not a big fan of the financials. We're going to take a look at the financials really quick just to get going here. Obviously with the rhetoric yesterday, let's see if we're printing this morning. Yeah, about 23.66 with the rhetoric yesterday at the FOMC meeting. Did you think anything different was going to happen? I hope you're not betting on anything different happening. Let's take a look at the levels here. This is our weekly for highs. I really like how this thing is kind of lagged a little bit, and really sitting around these weekly for highs, 23.58. Generally speaking, when we rise up to inflection points or lower to them, and you consolidate around them, it usually can be a continuation pattern. But I like how this thing is kind of stopped. Still like it as a short overall. And still think the rate environment is going to be not conducive to banks ripping people off and making more money. So that's the way I'm looking at that. Let's take a look at the S&Ps. Yesterday we had an interesting situation. Doesn't happen all the time, but talked about the profile here, the daily, pretty thin profile. Talked about not actually trading inside of it, but what happened yesterday, reached a high of 21.69 and a quarter, 21.69 and a half is the for highs, and then the low yesterday, 21.52 reached the bottom of the profile is 21.52. So, again, nice things to lean on. Some of the things that the Toms of the world, the David Whites of the world, the Steve Rhodes, the Basils, the whole nine yards, going down the line of all the hosts, they have some insane information. I like to use some of their thoughts to get some biased opinions around some of these inflection points on underlying instruments or indices. But right now, what do you do with the S&Ps? I personally feel like we're going to move higher. Why is that the case? If I go back into my dashboard here, I'll look at the statistics. When we started rolling over a little bit on the short term, but again, I'm kind of considering this noise. Still very, very strong on the weekly and daily, and you've got to be looking at a thin profile on a relative scale for breakout opportunities. Markets like lower rates. What does that mean in the long run? I mean, we've talked about this. This is going to end incredibly awful for a lot of people, and these markets are going to have to reprice themselves at some point. But you can't try to make too much sense of it when you've got technical action. The bids and offers have determined this is where we need to be right now. And this type of action, thin profile, consolidation, probably going to move higher. Okay, so just reading something in the den there. Yeah, it was... those were some good numbers yesterday. I mean, even though sometimes, they're pierced and you've got to give yourself a little noise factor around those levels, it just makes me feel good inside knowing I've got something to lean on. And again, I put a lot of value in those levels. Here's crude. Talked about a couple of crude stocks yesterday. I was talking to Tom on his show. There's some really good plays out there that have kind of raised their hand and said, you know what, I don't want to be sold. And with crude diving like it has this September contract, get a little bit of an up move this morning. The weeklies and dailies, nothing major turning around here. Here's the 240s. If you are trading this, again, staying with the 240 regulation of the trade down in this case, 42.44 short-term selling point. If we break that, we could actually move higher. But again, you don't really have any new profiles attempting to appear on September crude. Let me go into our scanner here just to make sure. Sometimes the scanner jumps the gun in a good way. No, nothing happening here. Our charts and scanners should be pretty much synced up, but sometimes the scanner will flash early. So here we go. See that 69 and arrow down? What that means is price is within a current TAS profile and has been in a downtrend for 69 bars. So it kind of tells you a little bit of story there, and is saying that 42.44 up top is that short-term kind of, all right, if we're going to keep turning the wrench the same way, that's your short-term resistance area, believe it or not. And Goldman Sachs now, God, as we know, a deity in itself, Goldman Sachs, is saying that, you know, crude oil prices should stay between $45 and $50. So we know now that crude's probably never going to stay between 45 and 50 just because they said it. They were the ones that predicted it's time to get long crude oil at 47. Caught that 3-point move. I got to give them that. And then obviously we pulled back. I hate those guys. It's another conversation. Here we go. So we looked at crude, and what I want to do now is just go into the ETF section. And I hate to be so boring about some of these things, but you know, this is not trading the Facebooks and the Apples and the earnings announcements related type situations. Here's the energy sector, obviously down on a profile aggregate calculation there on our daily, and here's all your metrics up top, right? So, you know, we looked at the XLE. It's actually kind of hanging in there. I want to pull up the chart here. Our wonderful charts. Here we go. So again, you know, could have been worse. Here's the weekly. You know, crude obviously getting hammered, but the XLE holding up and you know, still using that daily inflow as kind of a Custer's last stance almost there. But, you know, there's some great picks in here from the long side that have just been saying, you know what, I don't care what crude's doing. I don't want to be sold. So a couple of them we talked, you know, SWN, our little friend here, Williams Company's a really good pick. Even though we're kind of showing red across the board here, I want to show you this one. This is our daily. And again, you know, getting a little bit of a pullback there, but nothing to write home about. But the good news is we're coming into this 2278 area. Let me see if we're trading pre-market here. 20, yeah. So that weekly info high is going to be a big deal. And if you look at this, making higher lows and higher highs, actually, I'm learning stuff from Larry Pesavento all the time. 2278. We've closed above. We've come back and retested. If crude turns around at all, and Goldman Sachs is 45, we'll talk about that when we get back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, I had a request from the den. We're going to take a look at SLOB, SLB, Schlumberger. All right, so let's see. I don't know. 79.91 looks like a real print this morning. Looks like the specialist screwed somebody on the close there yesterday. That's what it looks like to me. Schlumberger. Used to call it slob. I don't know if they still call it slob. So let's see. So what I wanted to show in the scanner first, going into the XLE stocks and going down to Schlumberger, is couple of short-term time frame kind of red shoots here, but the thing you got to keep in mind is 4 arrow up even within the balance area in the daily, up profiles in the weekly. So let's just take a look at this. There's our daily, kind of in an uptrend there. Here's our weekly. So listen, this is a nice looking situation. If oil turns around at all, we could just get a move straight up. I like how it's held up. I like how it's kind of compressed up into these highs. And, we really have a pretty good, in my opinion, chance to bust through 81. Let me see here. Okay, so I'm going to take a look at it on our charts here. SLB. This is the E-signal charts, a little bit easier on the eyes. So here's the situation on Schlumberger, and so you got 78.79 down below and 76.65. So you could look at this as such an insane relative strength play right now. I think you're very okay to be long this. Any bumps in oil up top may just give you a couple little moves up here, to be simplistic about the whole thing. Let's take a look at Whole Foods really quick. I have to laugh every time I remember they put one in Raleigh. God, in the mid 80s, and I went in there and salmon was like $18 a pound or something. I mean, and I was, that was just shocking. It's shocking now. The only person that could sell that to me is Marie Osmond. She comes on those commercials, man. You just want to, you eat the food, you lose the weight. But anyway, I'm sorry. So Whole Foods, incredibly high prices. I commend them on making that work. But here's the charts on Whole Foods. 31.94 support on it. I'm not a big fan of being long this stock ever. We're kind of gravitating below the daily unfair lows. And again, if you're looking to trade this based on earnings, fall throughs, and I think you've got something here that's probably going to continue to sink below 32. I hear you, Terry. All right. So let's take a look at Coca-Cola. Ouch. That's your mama. That got hit, huh? All right. So, you know, again, this is a, you know, big market cap. You guys know the story on Coke. Another decent example of, you know, why and when not to trade before earnings announcements. I can't handle this kind of stuff. For you guys who want a little action in your portfolio, you know, you're going to be right 50% of the time, literally. Statistically speaking, rolling the dice before earnings. I just can't do it myself. So what do you do with it now? So there's two scenarios. If you're short, I actually think you're still okay. If you're long before the announcement, again, you know, I have to just kind of take the pain and move on when stuff like this happens and not try to double down and try to fix a bad trade. Sometimes when you try to fix a bad trade, it just ends up getting worse. I've never had one work out well doing that. And it's better for me to clear my mind of things like that. Let's take a look at gold. Talked about this yesterday. What a killer move. And talked about, you know, whatever this wacky woman says, and whatever the Fed talking heads say, you just had this really killer setup on gold, stops below 13.15. This is a nice $30 an ounce move. I don't think this is over. The thing is, now, once we get through earnings, the S&Ps may move a little bit higher. Rates are kind of like frozen. Nobody's complaining about low rates, as sick as it is. You know, gold, I think, is just kind of, you know, ready to get back up to 1360 and 1377. If you're trading this short term, now you've got support around 1334. There's the 240s. And if you look at this, and you've also got a profile sitting below price action, these are very bullish scenarios that have set up here for this to move higher. You can't put stops below 1334 on this. All right. Notes. Going to hit that really quick. You know, this was, again, something very similar to gold, kind of basing down here, 132 neighborhood. I still think we've got a little bit of ways to go here, 133. If you're not in it now, it's kind of a low risk reward scenario. It's not a lot of places to play defense. But on the short term, again, you've got a 240 appearing below price action. You're coming down and kissing this 132.14. For you short term guys, this is support to move higher than the 132. Dollar, you know, obviously not liking that we don't have the confidence in our economy, blah, 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 from the Fed minutes. So this is going to be a natural reaction. I'm still not a fan of shorting this particular instrument no matter what. So getting back above 96.60 now is going to be something that I'd like to see to get long this thing. Remember, you've got the rest of the globe that we've enabled to think that printing money and rigging their currency and all that kind of jazz is okay. Forget long-term views. Let's let the central banks day trade the latest information. That's cooked. So here we go, silver. All right, so this is one, you know, the relative strength versus gold has been there on this. Talked about stops below 1904. Don't see any reason whatsoever to really take this off. We talked about that. Gold's up top, 21.22. Here's the short-term 240s. I still like this from the long side, 2047. I think, personally, I think gold is probably going to go past 1450. Goldman Sachs hasn't said that yet, thank God. We're going to take a look at a couple of ETFs, and then we're going to dive into some instruments. ExxonMobil, too. We didn't really finish what I was talking about on the XLE. This is a setup I'm super interested in right now. See that? 9046. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. So we're hitting ExxonMobil. Even though, Exxon's come off a little bit here, and the thing that's kind of cool is, when we have these types of breaks, you've got some trading opportunities. Oil obviously dragging some of these folks down, but as we talk about all the time, the long term takes precedence over the shorter terms on down the line. And I like how oil is, gotten bashed a little bit here, and ExxonMobil has just come back to where it's most recently broken out on the weekly. So I love it. A couple other stocks in the XLE. You know, we talked about Williams Company, Southwestern Energy. We hit Schlumberger for a little bit. Let's take a look at a couple other ones here. Marathon, MPC. This is one, you know, obviously hadn't been hit at all lately. Relatively safe play, stops below 36 on that one. Halliburton. Very cool situation on Halliburton too, 42.51. You know, a lot of these XLE stocks, I mean, if you look at the XLE in general, I'm going to pull it up. You know, these things, obviously we're on support on the daily here. But I like how, you know, following some of the other folks that are doing shows on TFNN, you know, these higher lows, higher highs, any type of rally in oil is going to probably give these things a little bit of a boost. The ones that have been getting their head bashed in, like Apache here lately, breaking down. You know, these are the ones you want to stay away from, even though, you know, it's not, you know, we're below weeklies and dailies. I'm just looking at the cell structure here. Let's take a look at this one too. FMC Tech. Yeah, this is obviously something to stay away from. So again, we're trying to play the relative strength trading game relative to an instrument that could move these things, being oil. Let's take a look at Transocean. Pretty decent pullback. You know, you've got better things to put your mental capital towards right now than that one. Let's take a look at Noble Energy. Yeah, see, that's not bad. 34.26. A lot of these stocks don't look bad on the XLE. All right, let's take a look at Facebook. Obviously, a company that touches everyone, except me, of course. Here we go. Weekly. So 132, I believe, was post-market yesterday. So now we're kind of gradually pulling back 128 and some change right now. So, you know, we're up in the nosebleed section on this. But, you know, do you step in and try to short this? No. This is a company that is showing zero reasons to short it, even though you might make a couple of points on the downside here. It's going to be a terrifying event, as usual, to be short this particular instrument. All right, so let's take a look at Amazon. You know, this is coming out with some information here, but 731, 732, big support on this. This is another one where I don't know if you can stand in the way of a train. That's the wrong symbol here. Hold on. Oh, I'm on the wrong screen. That's why it's not working. Here we go. So talked a little bit about the British pound and, you know, this decent support here. You got 130.19 unfair lows on the weekly, and then you got 130.78 here. So I really liked how this was basing around here to move higher, to explore the fair auction up into 136, believe it or not. So the yen, just to hit the currencies really quick, didn't get a daily close above that area, which was awful. Still looking at this only from the long side, and still looking at this really as we've already met our targets on the weekly and for highs, and we're just churning around here right now. It's okay to trade this above 105.34 in my opinion, but right now we just don't have a lot to hang on to right now. Australian dollar, really like this from the long side only. A little bit of a shakeout yesterday, but again, I think we can easily get back up into the 76, 77 area, 76 and a half, 77 area. Still looking at that with glee. All right, let's hit a couple more here. Wrong symbol again. Hold on. Let's take a look at Bank of America. Looks like we're trading 1460 this morning. I still like this, shorting it below 1491, stops above. Like this trade a lot, actually. GoPro. Let's take a look at the biggest scam. I mean, the one of the best camera companies out there. Here we go. Let's see where we're at pre-market here. Real print, 1180. So I think this thing could trade down to 10 in a heartbeat. Stops above 1182. I like how this thing broke down again on the dailies and just kind of, I don't know what's going to save that company. Pretty CEO though. If you like. Anyway, 1015 on beans, 973 going to be support now. And I think 1015 down to 973. You got that profile. Unfair low right there at 973. All right, let's take a look at the copper. We haven't looked at that in a while. We want to just kind of hit it really quick. All right, so kind of broke down a little bit on the daily here. I got some emails about this. I just don't see any leverage trading copper right now. I don't even think it's worth the effort. Netflix. You guys know the news about that one. Looks like we're printing 92.20 this morning. You know, I don't see a lot of, here's the 92.20, a lot of crazy gaps here. But, you know, how do you trade Netflix if you're wanting to trade it? Again, I think, you know, that weekly close last week was unfortunate. We kind of rallied past that 88.35. But again, I look at this as kind of like a compression, lower highs, and, you know, a stock that doesn't really want to gravitate away from the lows over time. And I think we're going to have another flush in this. And I promise we're not going to end the show early today. I think we've got a caller, Ed from Atlanta. Ed, are you there?
Yeah, I was looking for Deutsche Bank. They came out with some really terrible earnings.
Okay.
It's supposed to be like the Lehman stock. What's going on?
Okay. Let me take a look at that when we come back from break, Ed. Can you hang on?
Oh, absolutely.
Thank you.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. Ed, are you still there? Ed? Maybe we lost him. That's okay. We're going to take a look at Deutsche Bank here for Ed from Atlanta. So, I guess the question is this going to turn into another Lehman? Well, they're obviously not using the model that Jamie Dimon uses at JP Morgan, which is rip people off and pay the fine later. He does the math, weigh it out. It's just it's a proven model. I don't know why the guys at Deutsche Bank, the heads, don't use that model. What do you guys think? It's proven. Anyway, back to reality here. So looking at the charts, this is, again, a prime example of things on their lows can go lower, no matter what it is. And when we look at Deutsche Bank and you look at the real serious technical breakdowns that started around 43, excuse me, it hasn't really looked back technically breaking profiles. So, what do you do with it now? If you're stuck in it trying to, find a bottom here, again, this is just like we looked at Netflix a while ago on a little bit grander scale. We make these lower highs, we kind of compress into these areas down here, and eventually we do a flush to get folks out. And, this thing, literally, you got to be thinking it can go below $10. You have to always, doubling down. When I hear those guys with the tie and the white shoes on CNBC come on and they talk about dollar cost averaging, they need to be taken out somewhere and executed. Those are awful things to tell people to do. And if you're doing that on this one, I mean, these guys could reorganize. I remember, Wachovia, what was going on, the Wells Fargo thing. I had some family members stuck in that, and anything can happen with these banks. I mean, this is leveraged capital, and they got a buttload of new fines coming down the pipe. So take that for what it's worth. All right, so let's go back to the scanner for a second. I want to go into the dashboard here. And looking at, if you'll notice on the dashboard, what's chosen for you is the NASDAQ and the S&Ps. So we've got the U.S. market when you go to the dashboard by default. And what I want to do is go into here and look at things that are in a kind of a downtrend. Excuse me, breakdowns first. So a couple of days ago, I was looking at these sorts, and we only had like maybe literally 5 or 6 stocks in the S&P that were breaking down. Don't have really considerably more right now, but Gilead Science, that's obviously not the one on sale here. You've got big time resistance now, 83.46, and that coincides with 83.21, that general neighborhood. You hope we get a rally back up into that area so you can really step on the gas pedal on the short side and put some stops in. I don't think it's over for that thing. Remember, the darling of the exploratory research pharmaceutical world can have its day. All right, here we go. So a couple other stocks breaking down. Let's take a look at Anthem. Again, definition breakdown on the weekly there. These are stocks that, again, might not be as painful if you're looking to short something. I personally think the market's going to go a little higher. Here's JB Hunt. I like this setup on the daily. Let's take a look at a couple other ones. Tractor Supply. Nah, not a lot of leverage there. Let's take a look at Under Armour. This looks ugly, huh? All right, so now, in my opinion, we could explore down into 36.61 on Under Armour. I want to take a look at American Express too. I'm sorry, VRTX. We'll take a look at that in a second. American Express, you step back and look at this. This is our weekly, not exactly performing that well when you step back and look at it. Right in the middle of a fair auction on the long term. And the big floor down there is 62.90, 62.40, that general area. We get any kind of market help, I think we could pull back in AXP right now. VRTX. All right, so it's a $96 stock. Looks like we're trading down this morning. Or no, yesterday on the close, 93.60 looks like a real print. So 93.60, so pull back. And I don't, again, an XLV stock. Let's go into the scanner really quick. Let's look at the XLV. And let's just kind of get our head wrapped around. Where is it? There it is. Where these stocks are at in general. Decent sea of green here, some reds. Just looking at it from a cursory view. Taking a look at some of the strong stocks, the weak stocks, and some of the sorts we're doing here. VRTX, even with the pullback, looks like a really decent, strong stock here. So when I go into my weekly, I think 91.19 would, if you could get a pullback to that area, that'd be a great place to pick a battle on VRTX. All right, let's take a look at the S&Ps again. My general thoughts here, markets like to worry, and we're seemingly getting through this earnings season decently, and this type of thin profile, you don't want to generally trade inside these thin profiles. They're usually to be used as breakouts. We obviously hit both points yesterday to the tick, but I generally think we can head higher up into 2200, that general area. All the breadth profiles look relatively well on our long term. When we go back into looking at our U.S. net profile breadth calculations here, the short term has rolled over a little bit, but remember, when we have long-term profiles, i.e. 2152, and our breadth is positive, we're kind of rotely, defaultly supposed to be looking at, broad market is imbalanced on the upside, and, these index support areas are to be bought. And I know you guys that are short, want to be short don't want to hear this, but it is what it is. And any breakdowns in that, until you see that breadth start rolling over, or at least getting mixed up, it's not a big moniker to start stepping on the short gas pedal. Guys, we'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. We were talking about the S&Ps and trying to figure out that mess. Sometimes it's so much easier to look around at other instruments and try to figure out what's the easier trade to really do. And, this gold trade has been something that's been very interesting hanging around down here at this 1315. You finally got the move. Great risk-reward scenario on this one. And that goes for trying to drill down into, that goes for drilling down into some of the underlying instruments like, the crude oil sector, XLE, whatever you want to call it. And trying to find, things that are saying, hey, wow, there's an anomaly here relative to the underlying instrument. We always talk about, the note trade. And again, this is one just a little bit easier to deal with sometimes than the S&Ps. The S&Ps are one of the harder instruments to trade on the planet. You're talking about just general market sentiment factored in with a bias towards the long side, of course. More people participating, more buyers, or, there's an equal amount of buyers and sellers, but the leverage is usually towards the long side. And then you've got, news, individual, you guys know the drill there. But again, I like to look around and try to find things to drill down into that may be a little bit easier to deal with. That's why sticking with, one specific instrument that you trade every day, you start seeing things that aren't there sometimes. And I like for people to remind me of that because, I'm a victim of it too. So looking around, I haven't talked about China lately because there's just nothing doing there. It could be stuck in the high 2000s literally for a long while. Here's the FTSE situation. Here's where we are here. 66, 60, 66, 61. Support on the FTSE. And that type of action is usually continuation-ish. Let's take a look at wheat. We haven't looked at this in a while. Here's September wheat. 411 is support on this. You got some upside on the current profile at 442.5. Again, the grains are kind of settling in now as far as pricing goes. Let's take a look at Johnson & Johnson really quick. 123.45 still support on this. Again, you've got to look at this as, if it ain't broke, don't fix it. We've had these daily profiles regulate this trade up. We've had support areas found, breakouts, support areas, breakouts, compression, breakouts. Turner rinse the same way. Next support on this 123.45, folks. Microsoft. All right, so I talked about Microsoft. I mean, my personal feelings, I like the company. I like a lot of the things they've done recently. That weekly close above, and last week that retest 53.06. And then, obviously news related, but what do you do with it now? So it looks like pre-market we're trading 55.99 on Microsoft. New profile attempting to appear, so you got to wait and see on Microsoft right now to find support again. Guys, you've been great. Stay tuned for Larry. We'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.